What's going on, everyone? So today is another trade review. So it's Tuesday, August 20th, and I'm going to be going over what I saw today in the market. It was a beautiful day for framework, and I haven't done a review in a little while, so I figured I need to hop on here, do some more. I have a lot of people that have reached out to me and said, hey, you know, when are you going to do some more of these? They really help a lot. Pretty much get into the my mindset of what I'm looking at when I'm reading these markets. Now, as you know or may not know, I trade ICT concepts. I learned basically off the 2022 model. Now, I'm not, you know, for anybody that's just watching this that hasn't seen any of my other videos, I don't teach the I don't teach you how to do this, right? Because I went through the whole mentorship. I'm learning. I'm still learning. I've done all the hard work. I'm not going to go out there and try to teach you, you know, exactly thing for thing on how to do it. You know, you can do that. You can take the time and do it. And yeah, it's all on his YouTube channel, ICT Concepts. And if you haven't tuned into the 2024 model, it is amazing. So he is dropping some gold on there. You need to go study it. So I kind of look at it like the 2022 model, mentorship. I keep saying model. Mentorship is like the base, like the foundation. Okay, and it is solid. It is so good. And then his 2024 model he's doing right now, I feel like it's like all the finishing touches, simplifies a lot of stuff. It's just beautiful. So if you are new and you haven't learned any of his stuff, I recommend going to the 2022 model on his YouTube page. Don't pay anybody for this stuff. I'm telling you, it's there. Just take the time, go through the videos, get you a notebook. I got my notebooks. One of these drawers somewhere. I got my notebooks. Okay, take the time, go through it all, study it, then hop on his 2024, do the same thing. It is gold. All right, so I know a lot of this that you're going to see on my chart here, you won't see on his. He's talking about this stuff, but he's not marking it. I've been only doing this for about 10 months with his mentorship, his model, all that stuff. It's been great. I'm being super, super consistent. It's been just amazing. So I still mark this stuff. I like to see this stuff on my chart. Yeah, it looks a little busy, but I cleared out and actually I left all this stuff on here for today to show for this video. But at the end of the day, I remove everything and start over fresh the next day. Why do I do that? Because it forces me to think, right? To read the market, not to just go in here and start. And that's also why I don't like to use any kind of indicator for ICT, any tools, anything like that, auto plotting. When I first started, I used an auto fair value gap tool. That way I could see them plot. And once I started recognizing them, like my eye automatically draws to them everywhere now. I got rid of it because I want to take the time to dig in, to actually read and see what's going on in these markets. And if, you know, so do that. Don't pay anybody. Go watch these videos. They're all there. Again, I'm never teaching you. I'm not trying to take credit for anything. I simply want to do these reviews based on how I'm reading it, my mindset, and you know, you might pick something up on it. And if you do, great. If not, don't just go off of what I'm saying. Watch his videos. And if somehow ICT does come across any of my videos, I appreciate everything you do. It's awesome. All right, so this is the 1 minute time frame right here, right? So basically I have it here because I start trading after the open. I pretty much look for my entry between 9:50 and 10:50 in the morning. If I don't get an entry, I'm done. I don't care. I take one setup, one entry, win or loss. I am done. I've been doing that since I started, basically. The entire year. It's been amazing. So I look here. So this is the 1 minute. And today I'm going to reference the 15 minute and the daily because those were crucial for today. So let me bring down this 15-minute chart I have up here. I have 6 monitors, so I got my charts all over the place. Okay, so pretty much here is the open, right? Here's 9:15. The next bar is 9:30. So I'm going to back it up here because I'm trying to analyze before I start trading what's going on. Okay, so here we go. So this is basically what I'm looking at. As soon as I open my chart, I hop on the 15-minute here, and I want to see what do my eyes immediately draw to. If I'm looking at this 15-minute chart, where does it immediately draw to? First thing, I noticed this big spike up bar right here. This big bar left a big, huge 15-minute fair value gap. So I mark that. I note that. Okay. And then right below it, I see this one too. Okay, cool. Remember, price was like right here at 9. I wish this little thing was in my way. Or let me do this. Let me back it up a little bit. There we go. Look at that. Price 9:15 was right here. It drew into this 15-minute gap. That's at 19,812 basically. So I marked this one down here because just in case if price does keep, wanting to draw to something higher, maybe this is a higher time frame gap, like a 1 hour or something. Cool. If it draws down even further, then I know there's something else there. Remember this. Price is always drawing to either an imbalance or sell side or buy side liquidity. That's basically it. Okay. So if it stops here and goes up, great. If it keeps going, well, where's the next area that it may go to? There's no relatively equal lows or anything going on here, right? We just had a big run up. So where's the next imbalance? Right here. So let me go ahead and mark it just in case price does keep going down. Okay, so I go ahead and mark that. All right, so now that I have those two marked, what else do I see? I see a lot of sideways, right? You could say, okay, well, there's a low here, low here, low here. These could be like relatively equal lows, but we're down here already. So price already took these. So I don't care about these. So if I don't care about these, all I care about is this imbalance, this fair value gap, and then this fair value gap. And then of course this would be an order block here since we had this big gap up. But I care about this area if it keeps going down. That's it for the moment. So on the long side, where do I care about here now? Now I'm looking, okay, is there any imbalances? Is there any clear or relatively equal highs? Well, let's get in closer here. Immediately, I just go back and start kind of looking. No. But immediately I noticed this, right? And this is a big 15-minute fair value gap that did not get completely closed, right? So price came in, it wicked through, but the body closed here. So pretty much it did leave this portion open. Nope. There's the wick right there. This portion right there open. Left that portion. So I'm thinking, okay, cool. Let me just leave that there for now, right? And then let's go to 7 a.m.s right there. I'm going to put this vertical line. After 7 a.m., do we have any smooth areas? Well, this is this is relatively smooth. We have some pretty relatively equal highs here compared to down here where we are. Down here, we're just drawing down to something. Well, what did we draw down to? I mean, look at this. This is just incredible. Exactly the middle, the consequent encroachment of this 15-minute gap. I mean, exactly down to it. So I'm looking at that like, okay, we drew down to this. Price may want to deliver because it drew down to that. It may want to deliver back through here. Then it may want to come fill the rest of this imbalance here that it did not get. And then you'll notice this big shaded area. What is that, you might ask? Well, let me show you. Let's get rid of this 15-minute chart. That is going to be from the daily chart. On the daily chart, I do reference this daily chart often because I like to mark the high and the low of the previous day. And if you'll notice, we have a big volume imbalance here. And I've been watching this for a little while. So immediately, I know price is, let me move this out of the way. Price is up here already, right? So I'm like, hey, we've been going up. Well, this is the bar. Currently, right now that I'm doing this, it's already technically next day. So you got to ignore this one. This is the bar that for the day. As you can see on the bottom, August 20th, right here on the bottom. So we're already, poking up here. So I'm already instantly like, look, if we do run up, we're going to run up and we're going to try to fill this volume imbalance. And I want to see, so I was looking for longs in the morning, right? I was looking for a long because I'm under the bias of we're going to run up and fill this volume imbalance, this daily volume imbalance. Now, let me pause right here and let me give you a little tip if you're using TradingView, because this messed me up and you'll see why. So you see this button down here where it says set. You want to make sure that's highlighted at all times. Use settlement as close on daily interval. Make sure it's highlighted because look what happens if it's not. Look at my volume imbalance. Okay, so I accidentally had it unset. And so because of that, it looked like that portion was not filled. So I'll show you why that's important. I'll show you what happened when I get to showing you my trade here in a minute. But look at that. That messed me up a little bit today. I got the win, but I would have gotten a bigger win had I had this set and noticed we actually filled that volume imbalance. So that's what I was looking at, okay? Now, let's go back to here. So that is what that shaded, this is the 1 minute now. That is what this big shaded area is. Now let me extend this over just so I can show you. Okay, this is that remaining portion that was left unfilled. Okay. So I have every belief in me that price is going to go up now because especially it respected the middle of that 15-minute fair value gap, consequent encroachment like no other. Okay. So let me pull up this 5-minute also, because that's going to be. So if I pull over this 5-minute chart, also remember 7 a.m. I looked at. If you look at 7 a.m., price was delivered. Let's go back here where we can see. So price was delivering down here. And then that smooth area that I mentioned. And it looks pretty smooth here too on the 5-minute. Right? After 7 a.m., here's some smooth area. So in my opinion, and here's the 8:30 opening price. So at 8:30, price opened and just ran down. So we have an open low. We should get a high and then close. So we opened and low, went low. Now we have this kind of smooth area. I'm thinking we're going to deliver up through here since we reached down in that 15-minute gap. Go through here, which if we go through here, we're more than likely going to fill the rest of this 15-minute gap that didn't get filled. And then we're going to just keep pushing on through and fill the rest of this volume imbalance. That's what I was looking at. So I was looking to get a long to take it all the way through that. Now, the way my mind works is, and the way I do this is if I don't catch a long through here and it is still within my my time to basically my trading hour that I like to trade, then once it does that, I'll look for a short if there's one that presents itself, if it makes sense, right? Like if there's no long at all, because sometimes price just runs away, and if it just kept running long, then that's it. It's over. I don't take a trade. Like if price runs up and it just runs up, takes this out here and just keeps running long, I'm not taking a trade that day. So let me show you what happens here. We go to the 1-minute chart. Price opens. And then what does it do? It shoots up. Now it leaves a 5-minute gap, fair value gap going up. And then right here, Right here is a 5-minute volume imbalance that it left from the 5-minute chart right there. Okay. 5-minute volume imbalance. We had this gap going up on the 1 minute, just going up, left this volume imbalance on the 1 minute, left this big 5-minute gap here. Okay. And then it kept going up, and then it ended up leaving this shaded area is another 15-minute gap going up, this big shaded area. Okay. So now I'm going to erase this one so we can see better. So now it's going up, and I mean, it just runs up. Look, here's the new day opening gap from 8:20, or for today, basically. And look how it runs up, hits the consequent encroachment, bounces down, consequent encroachment, bounces right off it again, kind of does some little chopping area up in here, and then runs up. And look, I never get along. Technically, yes. So here was an inverted fair value gap. Some people may have taken this. Inverted fair value gap right here, where it left the volume imbalance, where it created this 5-minute gap, came back in. Could you have taken that? Yeah, you could have taken this and ran it all the way up. No problem. There was another little fair value gap here. There was another one up here. So there was entries to take to take this long, right? There was some. However, these are not any entries that I take. I like to stick to one specific entry, one specific money management plan, and do the same thing over and over and over. Maybe later I'll add stuff, but look, I've been doing this for 10 months with ICT. And so here we go. My entry model that I like to take is this gap right here. I would have loved for price to come up and then come back into this one, and I would have taken this one long. Boom. That's my entry model. And I would have probably aimed for these highs right up here. Right here, basically where I have that marked. That would have been my target. From this gap up, this fair value gap. I didn't get it. So, or if it ran up, created this 5-minute one, and then dug back down into it, then I would have looked for another entry. But this one up here, I don't take. It's too far for me from. I like to be down here. And then inverted fair value gaps, I'm not taking those entries unless they align with also a regular fair value gap. Like if they overlap, I'll take it. But this one, I know a lot of people probably took this long right here. And kudos if you did, because that would have been a great run. So let's get rid of that. And then for the sake of showing you guys, I'm going to get rid of this 5 minutes so it clears it up a little bit more. All right, so it ran. Let me get rid of this one. So it took out those highs, right? Then here we go. Filled the rest of that 15-minute gap. Right here. So I'm going to get rid of that. And then look at it go. And here's the volume imbalance. Look at that. Beautiful. Boom. The high of this volume imbalance is 19,925. The high of this bar right here, this wick, right there, 19,924.75. One tick away from it. That's incredible. So, since it filled the volume imbalance, I was thinking maybe it could go try and hit this London high. Maybe. I don't really care if it does. So, remember back where I said that I had that thing set on the daily where it looked like it hadn't filled the volume imbalance? So, at the time when I was trading, I thought it hasn't filled it yet. So I was hesitant to take a short. But if you look, so what I was looking at is, here's the 15-minute chart again. Let's, here's the 15-minute chart. Look at this. Because I thought it hadn't reached up yet. And we had this big 15-minute gap right here. I said, oh, well, it'll probably come back down to the top of this gap, 15-minute gap, fair value gap, maybe the bottom and clear this volume imbalance, and then go back up and fill the rest of that daily volume imbalance. That's what I was thinking at the time. So my trade was based on that logic. Had I have this setting correct and I knew that it did this, I would have held for a lot longer. So what I did was, you see price came down and had major displacement here, left this gap. Now we had this fair value gap here also, which made it an inversion fair value gap. And then it left this one, fresh one, boom. Took out this swing right here, right there. Took that swing, little swing, pull up, boom. Inverted, left that swing. And this was my entry right here. Came back up. My entry is right here as it came into this gap. That's my entry. Stop right above the high. Okay. I allow it to trade back in here, and I would even allow it to come back and hit this inverted gap. And if it takes this high, I want out. Plain and simple. Now, my target was right here. This volume imbalance. Right here was my target. And then I started telling myself, well, it could, if I'm looking at the 15-minute chart, it would be a setup on the 15-minute chart if it came down and hit the top of the fair value gap and then went back up and filled the rest of the volume imbalance, which I thought was up here. So, as I was in the trade, I was like, well, you know what? Let me go ahead and just move it to the top of this fair value gap right here. Just in case. Just in case. And in case it wants to come down, bounce. See this bar right here? How it came down right to the top. I thought maybe, because I thought that volume bounce was still open, I thought it could do that and then just go up and fill the rest of that volume imbalance. It wasn't until after I was done trading that I realized that it was wrong, that my setting on the daily chart was wrong. So then it came down, wham, right through that volume imbalance. And had I known that it filled that volume imbalance on the daily chart, I would have targeted this lower one on the 5-minute. Because look what happened. Boom, hit this 1-minute gap, which I would have loved my entry long to be. So that would have been a target. This would have been a target. So, I mean, if I had multiple contracts and I was taking, multiple targets, I would have had target 1, target 2, target 3, and then below is where you'd leave a runner if you do. So look at that. Boom, wicked through that 5-minute volume imbalance, pulled back up, and look at that. That sucker ran all the way down to that lower 15-minute gap. But it's all good. I didn't care. I was happy. I got me, let's see. In my Discord, we talk and post stuff. So if you're not in it, you should join it. But let's see. Let me pull up my chart with my execution. Here we go. With my execution here. And you can see, nope, that's not the one with my execution. One second. Should have had that ready. I just want to show. Let's see. Talk a lot. Did I not screenshot my execution? Could have swore I did. Well, okay. Anyways, I guess I didn't. So this was my entry in here, and then I took profit right here at the top. So 861 is where it was at, and my entry was right here, 898. So it was like 37.5 points is what I got. So yeah, I'm definitely happy with that. 37.5 points. Yeah, I could have gotten bigger trade, but I don't care. Most of my trades go anywhere from 35 to 55 points. my profits. Sometimes I'll get more. But yeah, that was my trade review. This to me was just beautiful today. It was so beautiful. I wanted the long. There was no long. Filled that volume imbalance. Came down here. We had this little shift, this little market structure shift. Took this pullback, this little swing here. Inverted this gap. Left a new one. Went in here. Kind of bounced around a little bit. I allow this area to be traded into. Ran out through the volume imbalance. Through that volume imbalance. And it was just beautiful. This was just beautiful. So, and then the rest of the day was the rest of the day. I mean, it ended up coming back up here at some point, it looks like, towards the end of the day. But yeah. So that's my review for today. Thought I'd throw in that little pointer of the daily chart. So make sure you don't get that. Make sure you don't get that mixed up. So, all right, that's all. Hope y'all have a great rest of your week. I hope you're having a great week. And as always, remember, trade well. Take care.